seconds till the music drops. 1, 2, 3, 4, 5. All right, welcome everyone to the show, Closing Bell. We have a really special guest in the office today in Vancouver. He was nice enough in this sunny, beautiful day to give us an hour of his day. Brian, welcome to the show.
Thank you. Thank you. Seems like it's a regular Thursday thing almost here. Come down and join the last Closing Bell show of the week. Of course, the Friday we don't do a Closing Bell. So, welcome everyone. And hope this is an informative session for you.
Yeah, we have tons of stuff to talk about, from the Feds to rates to jobless numbers to some trade ideas going into next week, the earning calendar, all that stuff. Really packed show. We got about people joining in. Before we start the show, Brian, you told me something interesting. I had no idea the CNBC segment is called Closing Bell.
Yeah. So we're thinking about changing it.
we should probably change the name to what? Last 30? Last 30 is
the
nice.
Last 30, yeah.
Yeah, the last 30.
So this is the last 30 minutes of the trading day. So yeah, it kind of fits.
Yeah.
So yeah, maybe we'll be changing that name up.
Probably that's a great idea. Yeah. So we in front of me you can see here Profit as an Active Trader, Brian's newest book. Before starting the show, I was just checking the Amazon page, and I noticed 6 ratings, 5 stars. Congrats on
already. Yeah. No, I was surprised. A couple went up pretty fast. I guess people just picked it up and burned through it. I know there were a number of people that emailed me and said they really enjoyed the book. So yeah, it's great.
Yeah.
Again, I hope just like my first book, it's it's always great sharing knowledge with people and hearing positive feedback. I mean, it makes you feel really good when you're helping people with their financial goals and giving them ideas that they hadn't thought of or hadn't heard of before. So. Yeah, it's great.
I know how much you spent on this book, so it's definitely amazing how much time you spent.
Well, all these books are, and you've written a book too, of course, and it's amazing how much time it does take. It's not something you throw together over a couple of months. It's a year or more of work. In that case, it was more than a year and a half with all the editing and stuff. So yeah.
And the hardest part is the editing. So like Tor's going through it, and he's hating his life right now. But I tell him it's for the better.
Yep.
Yeah. So David on the chat is saying, I'm just monitoring the chat in the YouTube, Brian. He's saying great follow-up book. Thank you so much. So that's amazing that the feedback has been there. Very excited.
Yeah. No. And I tried not to duplicate. I had to duplicate a bit of stuff in the new book. Just in case someone hadn't read my first book, so I needed to go back and cover some topics, and but I tried to put in a lot of new content that I didn't cover in the first book and tie it all together. So that was the sort of the goal anyway. So it sounds like I maybe hit the mark.
That's amazing. Yeah. We got a packed show today. Market is ripping right now, so I want to get into the market as well. If any of our members are in New York this weekend, make sure to RSVP. There's a link and join us. Over 100 people have signed up so far. It's going to be an amazing meetup. My first meetup outside of Canada. Brian unfortunately couldn't come. He has some family commitments.
Yeah. And it would be if I decided to go to New York, I'd be a divorce party too. So I think unfortunately I'm not going to be able to make it to this event. But I know just speaking with Megan this morning after Andrew dropped off, we are planning a meetup in California. I think August 20th.
Oh wow, beautiful.
Yeah. So I think the date is confirmed, August 20th. Probably going to be in Anaheim. There isn't a venue chosen yet, but I definitely have that one marked on my calendar. So that'll be looking forward to that one anyway. Because I haven't been to a meetup in a long time. I think we actually did one in
Vancouver.
We did one in Vancouver just recently, just at the office here, and we did one in Toronto. It was a smaller meeting. It was at one of our members' houses. Peter came down from Ottawa. It was great. Yeah, we had a really good time. It was a small group. We sat outside because it was summer, and it was a pandemic meeting, but it was it was really good, and the hosts were awesome. So just at a family house. So it was great, and they can see, as you mentioned, the markets are ripping. They're just taking off here. I just got long some TQQ, and some SPX XL just before I came down here, and it was kind of as the market was kind of breaking out again, because it just seems like, we're back into this sort of buy the dip mentality. Like markets sell off, and then they seem to bottom, and then they go back up again. So the VIX is telling you there isn't a lot of fear in the market.
Yeah.
We look at the VIX. The VIX was, even though we were off a little bit yesterday on most of the indexes, the VIX was down as well. So it tells you, fear index is telling you that traders aren't looking for downside, or at least they're not buying protection anyway.
Yeah, definitely. VIX is currently at 29. I think this recent sell-off, the high was like at 30, 36, 37. So VIX has definitely came down. SPY really strong. So are you planning to hold those SPXL?
I think I will. Yeah, I mean, I think I'm going to hold it into the close, and it looks like we're getting a really quite a positive close here. So I'll probably just hang on to those, and probably, unless we get some bad news overnight, I expect we'll probably get more choppiness. We're seeing that in the morning.
Yeah.
I mean, as momentum traders in the morning and day traders, it's you have to keep adjusting your strategy to meet the market. And right now, with the way the market is right now, you've got to sit and wait a little bit. And I know Thor, one of our moderators, I think it took him about a half an hour to actually see a trade he liked. So so it's just that kind of a market right now. A little bit of indecision with traders and investors, but it seems like the bias is back to the upside after this big sell-off.
Yeah, I mean, I have the SPY chart up right now. If our producer can go to my screen, look at this chop fest, like. Yeah. No direction, like constant up and down. And I remember it was the first time I saw it took Andrew like 20 minutes to take even one trade. It was definitely, like, I can only imagine if you're kind of a momentum trader or a scalper, it's so difficult. And then all of a sudden at around 11, as you even say in your first book, usually after an hour the market opens, we find the trend, and the trend was downward, and then we reversed. Yeah. What did you trade this morning, Brian? You did some trade on Baba, right?
I traded Tesla and Baba. I traded Baba again today, and it was yesterday. It was I believe yesterday it was a really good trade for me, and today it was again probably my most profitable trade.
Did you take that long, or?
Yeah, I took it long.
Long at the open?
It kind of broke out. I think John H., one of our other moderators, he took almost the identical trade that I did. I think he got a little bit better of an exit than I did, but kudos to John. But that's we kind of saw the same thing, Baba breaking out there.
Yeah, right here
through 110. Yep, right in that area.
Yeah, these two candlesticks. Yep. John's discipline is amazing. I think he probably posted it on his Twitter as well. I'll bring that trade up. But it's still a lot of opportunities. I mean, the market, the indices were really choppy, but some of the stocks in play we're still good. Later in the show, we're going to get into the earning, what's happening next week, to some of the stuff. We'll talk a lot about oil today. We'll look at XLE. Brian and I were chatting before the show started to kind of, get an idea of whether XLE is a good long here. So we'll get into that as well. We got more people tuning in as well. Hey, Oleg, welcome to the show. Cesar, great having you here as well. Yeah, that price action was definitely really ugly, and it will make you want to drink. I've been actually putting Bailey's in my morning coffee recently.
Oh, does it help?
Man, it's really good. And we had one of our staff who works with us and is helping us grow the YouTube channel. He texted me in mid trading the other day. And he's like, "Are we out of Bailey's?" I'm like, let's not fully expect that there's always Bailey's in the office. Yeah. Let's take that as a plus. But yeah, it was definitely a good time and fun. So let's get into the slides and talk about the market. So we got our agenda here, some of the stuff that we want to talk about today, and of course use the chat if you have any questions or if there's anything you want to ask Brian. Now that we have him in the office, let's pick his brain a little bit. So the Fed testimony is going on, Brian. Powell is testifying in front of the Congress. A few things really stood out to me. One of them was the fact that he said we had bad inflation even before the war. So there's been an ongoing blaming the Putin and the war for inflation, but at least he was transparent and said we had an inflation problem even before the war broke out. And he talked about the 75 basis point, and he said it's pretty much a lock. So we've never had, I think, in the history, 275 basis point back to back.
Back to back, yeah.
And this is happening now. So when you look at the probability rate for the next meeting, which is end of July, the 75 is almost a 95%. So it's almost a lock. Everyone's saying it's definitely happening. What are you seeing? Is something going to break? They usually say when Fed is this aggressive, something will break in the market.
I don't know. I think, the fact that he's telegraphing it and that everybody's fairly confident that it's obviously that it's going to happen, I mean, that means that it's baked into the market. The market doesn't like indecision or lack of knowledge. But this is a strategy that Fed Powell has tried to use, is to try to keep telegraphing what he's doing so that there aren't any surprises, so people can adjust their expectations. And the market's obviously at this point has priced this in.
Yeah.
There's no question. And I think, again, it's sort of, maybe bad news for the economy is good news for the markets, because the markets want to see him get aggressive. They want to see him get ahead of inflation and really tamp it down. So they're seeing that as a positive, and maybe we will get a soft landing and get out of getting out of this. Maybe it's a mild recession. Or
yeah. There's some stats I'm gonna share a little later on the show that shows the amount of cash that is still sitting on the sidelines. So once the market is out of that fear of inflation, I think is out the window, and they know there is a path to bring inflation down, I guarantee you we're gonna see some really amazing rally. So if you're a trader, please try to stay solvent till that moment comes, because there is going to be a chance for you to make a lot of money. That's what I've been telling everyone. Just try to remain solvent. Powell was like a partner at Carlyle Group, the private equity. So like he was making like 4 or 5 millions a year. What is he doing taking all this harassment?
We were mentioning in the room this morning, I turned on it was on the TV I turned on before I got on, but They had a news flash, sort of a little news thing of him speaking, and I hadn't seen him for a while, and I thought, my God, he's like, in the last week he's aged 10 years, so he's not, so much stress,
Yeah, absolutely. I mean, I can only imagine.
I'm sure he's glad he's not getting calls from the president, or, but he's under a lot of stress, and there's a lot of things that aren't, in his control. That he's trying to manage his way through.
Yeah.
Certainly the war is the obvious one, but there's, nobody saw us coming out of this pandemic and just seeing the massive amount of demand for different things, whether it's travel, cars, and the shortage of the chips. And I just heard something as I was coming down here about Intel maybe having to cancel or slow down their new plant in Ohio. Yeah. So not good news for supply chain on the chips and new cars and all the other things that chips go into. So and those things are to a lot of degree are out of his control. So
that's true. And I think he's doing the best he can. I mean, he was maybe a little late to tighten, but and he admitted that he did admit that they were a little late to the party, but I think he's doing his best at this point. Some of the members are Shah is saying he's surviving the chop. Exactly, that's the name of the game. Indigenous Pathway is saying keeping cash on hand and ready. Exactly, that's definitely the way to survive this. So this was interesting. I saw this and I thought, let me put this on the slide for today. So this is what the market thinks by May next year the rates are going to be. As you can see, pretty normal distribution, with the majority of the probabilities somewhere at around 3.5 to about 3.75. So majority of the probability, people think that this is going to be the rates by next year, the Fed's fund rate. So if this is the case, that means the 10-year probably has to be somewhere around 4.5%, or the yields are going to invert. So that means recession if the 10-year goes below this. And the Fed's dot plot is actually showing somewhere around 4% for next year. So they think they're going to get the Fed's fund rate to 4%. And this was one of the things we talked about, Brian, yesterday with Andrew as well, that the market really thinks the Fed is bluffing. They can't be as aggressive. So they're basically showcasing, hey, by next year this time, the Fed's fund rate, which is the interest rate we're going to pay on our margins with Interactive Broker, the mortgage rate, all that stuff, plus some kind of a spread, is going to be somewhere around 3.5%.
Yeah, I think the markets, I think is a little calling their bluff a little bit here, because if you look at the yields right now, they're actually down. So, and over the last couple of days, I mentioned in the room this morning that this is sort of the second day I've seen TLT up, which is the price, that's the 20-year Treasury price. So if the price of the bond is going up, the yields are dropping. So yields are pulling back here, and I think maybe the bond market is possibly pricing in a bit of a recession with because they're thinking that the Fed will have to reverse course at some point. So it's an interesting dynamic going on, and some of the strongest tools they have in their toolbox is just talking. They've got that that sort of, if you want to call it, the bully pulpit, and they get up there and they can talk a market into something. So I think that's maybe what they're in part trying to do.
Like, one of the craziest things is they've already killed so much of the demand by just talking about raising. I just wanted to take a look at the yield curve for today to see if it's let me just close this ad really quickly, because you talked about, I want to see if it has inverted. So we got 10-year right now at 3%, 3.089, and we got 2-year at 3.01. So it's very, very, very flat. So this is looking at the spread right here, extremely almost going inverted. So very, very close to an inverted yield curve. Very interesting.
And the inversion of the yield curve is when the short-term yields go higher than the longer term, because in a normal environment you expect as the further in time you go out, the higher the interest that should be paid. But in this case, when the curves invert and the longer term yields drop below the shorter term, that's sometimes an indication of a pending recession. So
yeah, exactly. So someone in the chat is saying it's either a bluff or people think inflation is coming down. Yeah, inflation is coming down really aggressively. So market is basically pricing in a deflation, which is honestly in this environment is not out of the question. So this was an interesting data that I saw, Brian. I wanted to share with you. So cash levels are close to 40% in portfolios. Like even the portfolio that I'm trading with right now, my cash position is about 65 to 70%. I'm mostly cash beside my option trades. This is the highest in decade. So perhaps maybe the bottom for both equity and bonds because of these cash levels. So this is looking at the Lehman Brothers failure, what the cash level was. Somewhere around here. We're getting there. It's pretty high. So that means, again, lots of cash sitting on the sideline, basically getting ready to start to invest.
Yeah, it certainly can. If people decide to start shifting back into equities, and it can and catch some people on the short side as well. It can lead to a pretty severe rally. So We'll see what happens. I mean, it's interesting. That was something we kind of came across my mind when we were talking about something else here about the possibility of a recession. Was there's just so much money out there still. We were talking about this just before the open as well. How you go in Vancouver here, and there's no sign of recession. Restaurants are full at night, and I know it's like that in a lot of other places. Nobody's it doesn't seem like the people that have money are cutting back. So.
Yeah, exactly. I mean, this is interesting stuff whenever we say recession, people think doom and like the end of the world. But like the truth of the matter is, recession is usually most of the time very brief and felt by the businesses rather than the individuals and people in the economy. So you think of it right now, Netflix just announced they're laying off another 300 people.
Yeah.
A lot of the tech names are getting rid of people. From Coinbase cutting another 18%, freeze hiring, Docu letting a lot of people go. So it's those people are definitely being impacted, but that's the business really planning for that recession. Sal T is asking, when would be a good time to go back and look at the beaten down growth stocks again? I think that's a great question, and Brian can share his input. My thinking, Sal T, is when you look at growth stocks, their cash flow is happening further in the future, so they're still not free cash flow positive. So that means the majority of that earnings is happening in the future, and inflation really hurts those future cash flows. So what you want to do is you want to wait till inflation comes down, or there is a clear sign that inflation is going to come down. Then you'll probably see growth rally. That's kind of my 2 cents on how I'm waiting. One of the ETFs that I'm looking at is VUG, which is Vanguard's growth ETF. Just waiting for inflation, the headline inflation, to come down, and I'm probably going to load up on that. Brian, your thoughts?
Yeah, no, I tend to agree with you. I mean, we do look like we, on the charts are kind of telling us on a lot of these stocks that it looks like we put in a temporary sort of bottom here, and we're starting to pop back up again. It was funny, one of the firms upgraded, might have been JP Morgan, upgraded Snow, which is kind of one of those growth stocks you're talking about here. And man, it was trading, I'm just looking at the chart now, back in November it was trading at over $400, and now it's $143 today. It's up $15, almost $16 today. But I mean, you could look at that and think, maybe this would be a good buy on a pullback. I don't know.
It's still trading at 10 times revenue.
Yeah,
Brian. It's insane.
It's still expensive. I know.
So expensive. Yeah. But I mean, they're growing really fast. It's an amazing company. We use their product for Trading Terminal, the tool we're building. So it's one of those companies that we're using. Same with AWS, Amazon Web Services. But it's just, it seems like at least there is some kind of a short-term bottom around here. Maybe some premium selling, some selling puts around this area. But that's.
Yeah, I mean, as a strategy, I mean, you could sell options right around, sort of that 125 level. Yeah. Sell some puts, and then, if it gets put to you, then you own it at 125, which, but it may never get put to you, so you just collect the premium. But
right around here, there's a really nice level here. It has bounced here 1 time, 2 times, almost 3 times. So kind of a triple bottom. It seems like at least whoever the VCs or whoever is there, they're really protecting that 125 mark, at least for now.
I think you can be selective about some of these companies, and if you've got a longer term view. It really, we don't like to. We're obviously not in a position to give financial advice to people. Because everybody's position is completely different. But if you're, if you're a longer-term investor and just looking for something for your retirement fund that's, 5 years out, then, maybe not a bad place to picking up some shares and some different stocks.
Yeah, exactly. I had this gym that I go to. The person before me is I think a defense attorney, lawyer, so very well off. And he said, "Are you in the market, in the stock market? You're a trader?" I'm like, "Yeah. What's going on?" He's like, "Why is all my portfolio down so much? What's happening?" So I'm like, "Let me take a look." So I looked at his portfolio, and it's all these growth names: Shopify, like MDB, all these growth names. And I told him, if I were you, I would just sell some and take some tax loss credit here at this point.
But there are some good names out there, I think, that you could really look at for long term. I don't know. People are. Yesterday there was a long debate about on CNBC about Meta and whether it's a good investment at this point or not. But
what do you think?
It's one of those things that it really is it's really a business that is in somewhat of a transition. Yeah. And the success, nobody, when you go into a new business or you go into business, you don't know if you're going to be successful. And odds are, I mean, they've already got this nice base, and they've already got this massive, what is it, about 1/3 of the planet is on Facebook now. So they already have, starting with a massive customer base. So, I guess it's their ball to fumble, right?
Yeah. Definitely, you're absolutely right. It's exactly like they've gone into a new business. Yeah, one of the things I'm noticing on our platform is that we have the meta. We have only the information since it changed its name.
Yeah,
so
since it changed names.
Yeah, so I got to talk to our developers to make sure they can switch it back to Facebook and grab more data. But now at 158, I think at the peak in early January it was like $400 or something like that, which is definitely,
like a lot of these
crazy.
really got beaten up.
Indigenous Pathway is asking you, Brian, regarding finding a temporary bottom, how would daily volume be seen to confirm or negate that idea? That's a question
I think you want to see volume if you're making a move like today. I can't really get an indication on volume. I'm just looking at the price of the various indexes right now. We just seem to be continuing to spike higher here.
Yeah.
A little bit of enthusiastic buying going into the close. But you definitely want to see a confirmation with volume, because if it's light volume, it usually means that it's retail people that are getting in, and retail can be pretty flighty.
Yeah.
Usually smaller positions, so if things turn, they'll bail.
Yeah.
So if you're looking for more institutional participation, it's the high volume that kind of gives you that indication.
Yeah, definitely. So, you want to see some kind of a confirmation in the volume, and then you can pick a bottom. Great point.
There's the bell.
And that's the bell. Hence
ding,
the name
ding.
Closing Bell. There you go. Exactly. So let's get back into the slides. We got a few other stuff we want to talk about before we call it a show. This was something I talked to Andrew about the other day as well. This is very interesting. This price to rent ratio is the highest it's been. So even now higher than 2008. And we've talked about now mortgage rate being at around 6% in the US, so the highest it's been in a really long time. Medium house prices now somewhere around 500 to 600,000 in the US. So houses are expensive. The rates are going up. When the price to rent ratio goes up, that means like a lot of people who are looking at it as an investment, they're probably not producing any positive cap rate. What's your thought on the housing market, Brian?
Yeah, it's still, again, it gets back to there's still lots of money out there, with all the money that the Fed pumped into the economy over the last couple of years, since even going back before COVID.
Yeah.
They were already juicing the market with lots of money.
Yeah.
And so there's still lots of money out there, and I think that's one of the challenges is you've still got money looking for a home, and so to speak.
Yeah,
So,
exactly.
Yeah.
No pun intended.
No pun intended.
That was a good one.
Yeah, money's looking for a home. Well, and there were some of the funds were out there buying real estate too, right?
Yeah.
And I think they were taking some criticism for it because people are trying to get into the housing market. And your average young family, and you're competing against. I think it was a BlackRock.
Yeah, BlackRock and KKR.
Yeah, KKR are buying, or you're competing against them for buying a place to live. Yeah, so again, I think it just gets back to supply and demand, and there's still, and you talk about here, there's still an undersupply of houses, and it's just boils down to supply and demand, and who can afford to pay up and who can't. But certainly, I think the markets are cooling off a little bit. We talked about. Yesterday, I think it was J.P. Morgan announced they were laying off a lot of their people in their mortgage underwriting property. So I mean, it tells you that mortgage underwriting is slowing down.
Yeah.
So maybe that's good news for some buyers, that maybe we're going to get a bit of a cooling of the pricing. But I find with real estate, and it seems to go in spurts. You get this big spurt up, and then you get this cooling off, and the price kind of drops back. But it never goes back to where it was before. You get a 10, 20%, 15% drop, and then it just sort of chugs along.
Yeah.
Until maybe a year, maybe 5 years, and then all of a sudden something will light a fire under it again. So seems to be the way housing prices go. But
yeah, housing is one of those things. If you have a long enough time horizon, you can never lose money on them.
No, and I mean, if you're an investor, I know somebody in the U.S. Friend of mine who's he went in and bought a lot of homes in Detroit when they were all there was the crisis, and there were a lot of these short sales which we don't have up in Canada. But he went in and bought a lot of houses, and now they're worth 3-4 times what he bought them for, and he went in and put 20 or 30 grand in because they're all run down. And he rents them out, and that's his income. So it's it's providing him with a great income. So your portfolio should include real estate.
Yeah, definitely.
The diversification.
100%. We just passed 100 people. So 100 people has joined our show. So 100 people are watching us live. So, if you're enjoying all the stuff we're talking about, from housing to all these stat datas, and a lot of research goes into the show, give us a thumbs up. We really appreciate it. Or as Andrew like to say, smash that like button and subscribe to our channel. And of course, we're here with Brian, if you just joined our show. The author of Profiting as an Active Trader. The book just came out, very well reviewed already. Speaking of supply and demand, this was a really interesting data that I saw. So let me zoom into this chart a little bit so I can actually show it. This is what they call the crack spread. This is something I didn't know as well. I learned today, this morning, researching for the show, which basically shows the spread between the crude and kind of the raw oil to after it gets refined, so in the refineries. And this is the highest it's been ever. So about $58 more. And one of the reasons for that, and I know we have a lot of members who actually work in oil and gas, is over the past 10 years, there has been kind of an underinvestment in refineries in the US, a lot of them shutting down. And now, of course, with the war, this constraint on supply and refining the oil is a huge cause of the gasoline prices being so much higher. So looking at the oil prices can be a little bit misleading, because you look at the oil price, you compare it with the 08, the peak of that bubble, and you're like, the oil is not as expensive. Why my gas price has tripled? Well, you have to look at the crack spread, which is basically showing how much more expensive the refineries has been because of the lack of supply. I wrote an article kind of blaming the ESG narrative and the ESG initiative with this underinvestment and lack of capex in the refineries. Brian, what's your thoughts on this?
I mean, I used to work when I was doing another job that had to do with recycling. I worked with a lot of refineries because they do generate some waste that can be recycled. But and it was sort of common knowledge and talked about quite often that. I can't remember when the last refinery was built in the States. It was probably 40 or 50 years ago.
That's exactly right. Yeah, 1977 or something.
Yeah. Like that. So I mean, this isn't a problem that's just happened over the last 5 years. I mean, this and it's not even so much ESG. I think it's just it got to the point where the permitting process, and it was just so much of a hassle. There was just no place in the country where you could get a permit to build a refinery, and oil prices are typically have been pretty volatile over those 50 years. So you might start out building a refinery, and then by the time it's done, your gasoline prices, oil prices are down 50%.
Yeah.
So I think the underinvestment is not even so much related to the ESG. I think it's just related to the real challenge in it's like that with anything, like with a mine or there's just so much. There's always somebody who doesn't want you to build this, and they'll drag you through court and whatever, so it's not even ESG. It's the permitting process, and the companies that just don't want to go through it anymore. So I think that's been a big contributor to the lack of refining capacity in the U.S.
Very well said.
In China, they just say, "Hey, we're going to build a refinery here," and you don't like it.
It is what it is. Yeah. And one of the things that they're so heavy with their oil usage that they're not really exporting a lot of those refined oil, so they're keeping it in house.
Yeah.
Another reason that I was doing some reading, another reason for this hiked up prices of gasoline is that, and one of the podcasts I was listening to, one of the solutions they talked about is maybe Biden and the administration putting some pressure on China and Beijing to release some of this refined oil into the market and bring that tension down. This was a really interesting tweet. This is Christopher Bolstam's friend of the show. I follow him. He comes in with really amazing analysis. So there's this video of this Ukrainian drone kind of attacking the refineries in Russia, and he's basically talking about the supply constraints. So U.S. is short about 1 million barrel a day of refinery capacity. The globe is short about 3 million barrels. So there's a huge amount of supply constraints. So if the Russian refinery is destroyed or offline for a long time, there will be a big margin swing. So a lot of problems kind of leading into this.
Yeah, I know China's a big, is taking a lot of the Russian oil now. So if they need the oil because now they can't get an ongoing supply from Russia, again, it impacts the globe, right? It's and I don't know what the latest is on China with their lockdowns. I haven't seen anything lately, but people keep talking about the day that China comes, stops locking down and starts to come back online, and so who knows?
I read somewhere something really funny. It says China won't stop until the whole world economy is destroyed. We have a special guest in the show. Someone's watching. Any guesses? One of our mods.
It's got to be Megan.
It's Peter, actually.
Oh, it's Peter.
So Peter's in the house.
Peter.
Huge shout out to Peter. Hopefully we can see him in New York. So speaking of refineries and supply constraint, let's get into trading, because this is, at the end of the day, this is a show about trading. One of the things Jared talked about is XLE oil is down about 25% since its peak just a couple of weeks ago. Do you think this level is a good place for oil to potentially bounce, or you think we're going to go lower? I just don't understand. I understand all the recession talks and pressure on commodities and energy, but I still think oil has a lot of room to go up. Brian's cell phone's no problem. Margin call? Is that SPXL?
You're a TQQQ
now. Exactly. It's your broker, prime brokerage calling. Brian, what do you think? Let's get your opinion on XLE. Is it a good long here? Should we start building position?
It's right at a level where it should see some support. It did kind of. It looks like I haven't got that chart up, but it does look like it. It tried to hold that level as we went into the close. So, I mean, you could take a stab here, and obviously your stop is a violation of today's low. So, I mean, this is an area where you could start bottom fishing. Yeah,
this is an area like 1 time here, 2 times here, and then now 3 times. It kind of respected this level. So I believe personally, if I wanted to take some trade, if I want to be a little less aggressive, maybe at 67 or 68, I would sell some puts. And then maybe buy some XLE and sell some calls against it. So some kind of a caller position. I've been reading your newsletter, and I realize you love doing that now too, right? You selling calls against your shares.
Yeah.
It's pretty awesome.
Yeah, it's a good way to collect some premium if you don't think there's a lot of upside. If you're going to sell calls to the upside.
Yeah.
If you look at some of these charts here, like the big components of XLE is like Phillips and Chevron and Exxon. I mean, they're all obviously all beaten up, and they're all back into areas where they should see some support as well. Yeah. So
I just brought up the Chevron chart on my screen. By the way, this is the trading terminal, a tool we're building really hard for all of our traders. So if you haven't checked it out, sign up. It's free. We got amazing charting, unlimited amounts of indicators you can put in there, earning calendars, overview, lots of good stuff. But anyway, Chevron chart over here, very similar to the XLE, about a 25% drawdown from 180 to 142, and this seems to be some kind of a level if you wanna trade it off that. Again, we talked about a lot of supply constraint and the war. I think energy should continue to be strong. Moving forward, even with a recession. That's just my personal opinion.
Yeah, I think the sell-off has been pretty dramatic. Obviously, we've taken the stairway up and the elevator down here on energy and oil, but I just, despite, the possibility of sort of an economic slowdown, I just can't see how, and you talked about supply demand.
Yeah.
It's still, we're still supply constrained. So.
Yeah. Yeah.
And we're going into the summer driving season, and who knows how
traveling. Demand for yeah. I still think there's a lot of misbalance, so it might be a good idea to maybe build a position. One thing I would say, what Rinesh said as well yesterday, respect your stop loss. That's really important. Respect it. Have a plan before you enter a trade. Don't get stuck in a trade. Let's get into some kind of foreshadowing of next week and earnings. So Q2 earnings is upon us. Nike will take the earnings season off next week as one of the highly anticipated earnings coming in. One of the things that was interesting and I talked about in the chat room today is this. After COVID, we saw a lot of surprises, earning revision to the upside. So especially in US, companies were saying, hey, we're going to beat estimate. Let's raise guidance. Now the pendulum has kind of swung, so a lot of revision, but to the downside. We still haven't gone negative, but a lot of revision to the downside. And we know as earning comes down, that means that the expectation of the future growth comes down, and therefore SPY and the indexes will come down. But something to look at. You mentioned KBH had earning, Brian. How was their earning?
They reported really good numbers. They had good earnings. They beat on the top and the bottom line, and they also guided. Fairly with some fair amount of positive, news. So I mean, they're, and I guess they've got a big backlog, over 12,000 units of orders on their books. So I mean, I think things are looking good. Now they're in a very sort of specific market niche. They're in the sort of almost I think they're in the custom built business. Yeah. So they're not dealing with just banging out homes and try to end on spec and trying to sell them. So their market is more people that are committed to buy a home and put money down, and this is what they want. So
speaking of KBH, I know we're not really fundamental traders and looking at fundamentals, but KBH was trading below its book value, Brian. Yeah. So market was basically saying, hey, there is no way you could sell these houses and you have to mark them down. And it's honestly, the valuations were getting really interesting, and as you can see, the earning a beat on the top and the bottom, so a gap up, and pretty strong throughout the day. So I think at least for KBH, we have kind of a temporary low, at least for now. Someone's asking, is the book available on the audiobook? I think the new book's still in the process, right? Is that?
Yeah, I don't have the audiobook. It's I'm just getting set up to get somebody to read it now. So you actually can't publish an audio version of your book until you've actually published your hard copy. So there's always a bit of a delay. So you can't get ahead of it until it's published, and then you can get and then you can put up the audio version. So just waiting for that.
Yeah. So for our viewers, the process is actually pretty tough. Is you publish your book, then you put it on Audible. You get a lot of requests, people narrating, and then you have to go to the selection process, and then the person goes through it. So it takes about 3 to 4 months for the audiobook to come out. So be a little patient with us. It's definitely on the way, and it's on the works. It's a tough process. Like publishing the book is such a slow and tough process. So kudos to Thor, by the way. We can't wait for his book to come out and support him as a community. I know he worked really hard with the family and the kids, so we can't wait to support him as well. So give us a thumbs up for Thor as well.
So just as a note, after hours here, we had FedEx, which I always like to look at the transports, and FedEx is at least trading up a little bit after the close here. It's up about 4%. So obviously, I don't know what they've said, but
that's good.
Yeah,
that's a good sign.
Yeah, it's a good sign for the market, because as the transports go, with the Dow theory, transports are an indicator of economic activity. The more goods that are moving, the more an indication of good economic activity going on. So. To see the transports confirming that the economy's good.
Yeah.
So
I brought the chart up. We got some massive volume here after hours and a nice pop. Now we're kind of consolidating. We're probably going to stay around here and maybe even pop higher. So that's great news. And yeah, as you can see, we got our charting is real time and has the extended hour option. So if you want to take a look at stuff pre-market and post-market, our charting capability will give you that. Getting into the last bit of the show, let's just go to our earning calendars. I think we've covered a lot. And see what's happening next week. So FedEx obviously had earning. Going into next week, as I mentioned, we got Nike reporting, one of the heavy hitters. We got PayPal reporting on Wednesday. Micron, a semiconductor producer, over here. So it's a starting, and I can't wait for this earnings season. Any specific earnings you're looking forward to, Brian?
Not really. Well, I guess Alcoa is one of the first ones that report, so it'll be interesting to see how the materials are looking. Because a lot of these materials, again, they're fairly economically sensitive. So, like if you look at FCX, like copper, we call it Dr. Copper because copper again an indicator. Demand for copper is again an indicator of economic activity. When it drops, obviously it's not good for the economy, or it indicates that the economy is not that great. So it's really gotten beaten up. So looking for some of those when we start getting into earnings season. So, and then the banks, of course, they're the ones that report first.
Exactly.
Along with Alcoa. So
what's the ticker for transport? Is it XLI or?
That's industrials.
Industrial, yeah. Which one was transport?
I don't know if there's a SPDR ETF for transports. I've never looked at it. I just look at trans or dollar tran.
I see. You're looking at the index, but
just the index overall.
Salty is asking what kind of companies are including in transport. I think industrial would be a good proxy, Salty. So if you just go to our ETF page and type in, you can kind of see you got your UPS, your FedEx, your 3M. These kind of companies, I think, will be included. Union Pacific Corporation. That's probably a good proxy for the transport. Let's just see. One of the earnings I'm looking actually, I'm gonna monitor really closely is Nike. Being a consumer discretionary and like looking at XLY and what has happened to XLY over the past few weeks, if Nike gives a really good guidance and say, hey, there's no slowdown in demand, that kind of brush off that recession talk that we've been talking about. So, if Nike has a good earning, it might be a good idea to maybe start building some position in XLY because it's been so beaten down that it really needs some kind of a break. So, if you're kind of a position trader, and of course, I'm looking forward to PayPal, just because the stock is down so much. Any little bit of misguidance could really trigger another 25-30% gap down. Investors don't have any more patience with this company and they're ready to dump it. So if you're an option trader, maybe a straddle would be really nice in there as well. Oh, someone's saying XTN is the ETF for transport. So let me actually let me pull that up. Thank you, Han. Han, by the way, is going through the peak capital trading, and he's one of our analysts. So a lot of the research that you see here is actually done by Han. So kudos to him. And yeah, these are the companies in XTN. So FedEx, Spirit Airlines, Hertz, UPS, things in that nature. So you got your holdings right over here. What a show. A little bit of, since this is our last show and the next show will be on Tuesday, we have a special guest on Tuesday. So Michael Gayed, who's a portfolio manager. He has about a couple of portfolios who he is actively managing. He's agreed to be on the show on Tuesday as a guest. So we're really excited to have him. Some of the lumber to gold ratios, all of that stuff that I talk about in the chat room is based on his research. He knows about our community and he was excited to come on the show. We'll probably have him about an hour. He has a really good following. So don't miss the Tuesday show. It's going to be amazing. We'll probably send an email. I'm just making sure like the date and stuff works for him, and then we'll send an announcement. So Tuesday show should be really, really amazing, and we got a lineup of really amazing guests on this show, so we can't wait to share them with you, and the learning will continue. For those of you, we'll probably see you over the weekend on New York. Those of you who are joining, we just found out Peter is joining as well, so that's really exciting. Brian, any plan for the weekend for you?
Yeah, I've got.
Yeah, you got some family.
I have my family thing. There's a shower for a baby that's coming, so yeah. So that's obviously.
That's really exciting. Congratulations, by the way.
Yeah.
Sorry, I kind of put you on the spot. It's my bad.
Yeah, you know, I mean, being called a grandfather, I guess that's not a title I ever wanted.
That's yeah. but our ladies in the chat room are calling you daddy. That has to stop.
Yeah, call me grandpa now.
Yeah. So someone's asking. They've read your previous book. And they've read Andrew's book. Is there anything new in this book for them? Do they get value?
Yeah, I think there is value. You know, obviously, to give background and context to what I wrote about further in the book, I needed to go back and go over some previous topics for people that actually hadn't read the first book. So, but I tried to stuff it full of new material as well. So. You know, it was a bit of a balancing act, and I think the people that have read my first book have said my second book they've enjoyed my second book as well. So yeah, like I said, I hope to strike that sort of balance between getting people informed that hadn't read the first books, so that they could you know, to get the context for the rest of the content that's in there. So
it's an amazing book. So when it came out, I was the first person who ordered like 20 copies for the office, and you know, there's a stuff about seasonality in there. There's a stuff about option trading in there. There's a stuff about insider selling and insider buying. So there's tons of new stuff. Yes, some of it is repeat. So I'm sure you'll get a value. And by the way, I'm not getting a commission. Maybe Brian will take me out for a lunch or something. But it's a heavier read than the first book. It's you know, so that I got everything in that, you know, that was previous. And then in the new content. So it's I think it's about 300, almost 400 pages. Yeah, amazing. So, well, thank you so much. Well, with that, that calls our show. I'm personally not going to be trading tomorrow. I'm flying really early with Andrew. We'll be in New York on Friday, and then we have the meetup on Saturday. So if you're around, make sure to come by. Drinks are on us. Let's have a good time. Let's talk market. Let's bounce off some trade ideas. It'll be an amazing time, and we'll definitely miss our moderators who can't be there, such as Brian.
Yeah. I would have loved to have been there. It would have been a great opportunity. It's these meetups, and New York meetups are great because so many people come out. You know, the last one we had was literally March 2020. Was, you know, I was flying back on the plane, and I was sitting beside people with masks on, and I'm thinking like this is like getting weird.
Bizarre,
yeah. And so that was our last New York meetup, and that was a great meetup. It was so much fun. A lot of people came out. I think we had almost 100 people at that bar. And so I'm sure the New York meetup will be great. I'm really sorry I won't be there, but I'll be looking forward to meeting some of our West Coast traders in August.
In August, yes, exactly. This time, 150 people RSVP'd. So going is strong. BBT is strong. BBT is growing. Thank you, everyone, for your support. Another great show. Of course, if you got any questions, feel free to email me at ardi@bearbultraders.com or brian@bearbultraders.com. We're always happy to help in any shape or form. And with that calls another show. Brian, thanks so much for coming in.
Enjoy, everybody. Enjoy the rest of your day wherever you are. And I'll be obviously in the room this morning or tomorrow morning.
Yes.
And we'll be looking for opportunities to make more money.
Amazing.
All right.
Yes.
Cheers, everyone. Have a great night.
Have a good one, everyone. Cheers. We'll see you later. Thank you.